Hey, Steve, Andy, what's going on today?
All right. Hey, thanks, Scott. Not much. Hello, Andy.
Hello, Steve. Hi, Scott.
All
And nice crowd today. Hello,
right.
everybody.
Yeah, people found their way in here today. That's
Yeah.
awesome. So, welcome to the afternoon series of the Trade Ideas webinars. This is the Trade of the Week theme. Again, I'm Steve, joined by Andy. We've both been Trade Ideas users since the beginning, 2003. So, we're here to talk about a few things today. If you have any questions, you can use the questions panel, and you'll do a good job trying to keep up. Um, I'll demonstrate if needed, but we do have some pre-designed content for everybody today we'll get to shortly. The first slide, of course, is the disclaimer, the slide that reminds everybody that we're not investment advisors, we're not brokers, we're not money managers. We are here as a SaaS, software as a subscription company. Myself and Andy are going to try and show you a few ideas, a few personal comments about the market, but anything we say shouldn't be construed as financial advice. If you need financial advice, you got to go seek out the people who are licensed to do so and charge you a 2% fee or less. So, getting started, just to remind everybody, yeah, it's a 16-year-old product almost now, and I've been using it since the beginning, and it kind of comes as second nature to us. But we recognize that new users have a lot to bite off and chew, and the learning curve can be steep. So, we try and offer as much opportunity for knowledge as we can, starting with Barry's live trading room. We're going to update this slide real soon because Barry has a real new cool platform that's a lot better than the old Omnovia platform. And he's there every day with a few hundred traders going through the market. A handful of the good experienced users chime in frequently and kind of take the lead in his live trading room. But the great news is it's free. And the quality of this room, I can tell you folks, is very, very much on par with people who are charging 80 bucks out there, 75 bucks a month for their live trading rooms. And in the meantime, you can also learn more about trade ideas. Barry does a great job sharing his screen and offering technical help with the platform. You just need to pull up a chair and communicate. It's a great deal. And then we have the afternoon webinars, such as we're speaking on right now. They always start at 5 Eastern, Monday through Thursday. We all kind of take the responsibility differently. Yesterday, Jamie had his content. Today, I'll talk about some things. Tomorrow, I believe Dan and Brad are speaking. And then Thursday, Andy takes over the content with some help from Jamie. And then Fridays, we do not have afternoon webinars. We have what we call Friday support session, which is during market hours by design, 11 to Eastern. 3 hours of open content. You guys can come in and ask us anything you want, and we'll answer within reason if we can, and demonstrate much like we're doing right here in the GoToWebinar format, using the questions and screen sharing. And then lastly, TI University, the next slide picks up. It's a 4-day course that restarts every Monday, and we're doing it live. We also have a recorded playlist of the 4 classes and the same content that we do discuss live every week. But as you can see, the beginning classes will start every Monday and wind up with more advanced stuff on Wednesday and Thursday. Andy and Jamie start talking about deeper dives in using the back tester and things like that. So, all that aside, the theme, as usual, for my webinar is man and machine combined. It's the world we're walking into, whether we like it or not. Machines are going to be very useful in terms of crunching large amount of data and presenting them to us, the human, who eventually has to disseminate that data and make decisions. What I'm trying to say here is the world in which we're going to move into is not plug into a machine and let the machine do everything. The machine is going to do all the heavy lifting and give us the options with which we can make better decisions. And a real quick side note, I always kind of delve off path a little bit here, but Brian Shannon showed me this, and Prime, if you have Amazon Prime, they have a really interesting new documentary. Andy, you'd like this too. I watched the first one, Money Laundering, was extremely interesting, but Brian
Oh, I
Shannon,
did. I watched the first one of those too.
yeah, Brian Shannon pointed out, hey,
Yeah.
Steve, you got to see this. Number 4, is AI the future? Will it keep us informed? Everything that I just sat there and talked about, the machines parsing through the data, the big data, and giving us the cream from which we can make decisions. Same stuff going on here in in the AI. Matter of fact, there's some really interesting conversations about, self-driving cars, which are probably 10 years away still, in all honesty and reality, because think about this, and they talk about this, it's really interesting. We have to program morality into these cars. If you're driving down the street in a narrow street and the four of you are in the car and somebody runs out in the street and jaywalks, if you swerve to avoid them, you go off a cliff. Is the car going to be programmed to hit the jaywalker or take the four people off the cliff? I mean, these are really deep, intense philosophical questions we're going to ask ourselves as we go forward with this self-driving cars and stuff. But I just wanted to point out again, all the stuff I say is just marvelously recapitalized by this number 4 series in the bigger series called This Giant Beast That Is the Global Economy. So I got a lot out of that, and I just made a mental note to share that with you guys as well. So, let's get started. The format's going to be pretty much the same as it was last week. And we'll start with market recap. Andy has some thoughts on the AI today. The trade of the week was a little different. It's actually the 4th time in about 3 years that we've called SDSs as a trade of the week, and we'll talk about the thoughts and the theories and the thinking and the conclusion that we came to cover that. It wasn't something that the AI spit out. This is a lot more discretionary, curated here. Andy and I probably both have about 35,000 hours worth of staring at charts. And if you figure it's about 120 hours a month on a 40-hour work week of staring at charts, that adds up to be about 10,000 hours after 5 years. And that old 10,000 hour mark is an old saying that says, once you have 10,000 hours, you've kind of seen it all. So it doesn't happen overnight in the market, guys. And the technology is no substitute for market knowledge. The technology is here to help assist with our learning curve and continue to build our 10,000 hours of observation and build our methods. Then we'll continue on and look at a sector glance again. We'll check out some of the alerts that was set last week, kind of a mixed bag. And then I've got some other alerts we can look at, and time permitting, and we can look at some charts as well. So let's get into the good stuff, the market analysis. A lot of overlap from what we talked about yesterday. The 20% market that we found ourselves in, a bear market for about a day and a half, is down here, and we've had a wonderful rally working through every single resistance level, finding support when we should. But there comes a time in our 35,000 hours of observation where Andy and I start to go, this market's starting to feel a little tired, and we'll talk about more of that when we get to the SDS trade of the week. But yesterday was a very interesting day. We had the beginnings of a sell-off. The market gapped up not too significantly, but it wasn't long before, and we talked about this yesterday, the bulls lost the buying right about there. We talk about the closing candle below that moving average, and that moving average is always very interesting to me. When we gap up in price and the moving average comes up to connect it, this is the area where the rubber hits the road. And so we had a failure and about 2 hours of solid selling yesterday. I tweeted and honestly thought that we might continue that downside momentum because it was really accelerating, and oftentimes when we get that bounce right back up into that declining moving average, I kind of really thought we'd be heading lower yesterday, but we didn't. This market, for lack of a better description, is a zombie market. It just keeps marching forward and fill it full of lead and takes a couple steps back like it did yesterday and just keeps marching forward. But today, I noticed towards the end of the day that this level right here was really having a tough time. And at the end of the day, the market making algorithms kind of gave up and went flat, didn't take home anything. So we sometimes we'll get these spikes or down or up at the end of the day with big volume. And to me, that's just a settlement of price action of market making algos that, again, will not take home risk. But back to the bigger picture, this is starting to feel like an airplane before it stalls. The wings start to buffet and shake. Andy's going to get a kick out of this because we have a funny little pet name for a half bath. I've said this market really needs a shower, some sort of a pullback where we can dig in and pull the battering ram back to assault this significant level up here. And when I say significant, let me show you something. Back out just a little bit now that I can do this. And you will be able to do it very soon. Weekly charts. All right. Weekly. We are now on a weekly chart. Look at how significant. I'm looking at these two tips right here, just so you can see. I'm identifying that, roughly that. Very significant. So it's not really a surprise when we look at this weekly chart that we see this is the area that would make most sense for us to pull back and get some sort of a shower, and maybe we can get some sort of, a cup and handle type of look. Because in my experience, when you've traveled this far, this long without a shower, and again, a monkey bath is what we got yesterday. A monkey bath is nothing more like when you're at the airport and you're splashing water on your face and a little bit of water under your pits. That's it. It's just not good enough for what we think we really need. I mean, maybe it goes through, and maybe this market just defies all logic, and it's the fear of missing out that just keeps driving the bidding higher. But again, with the 35,000 hours or so that we've been staring at markets, we really need some sort of a reset, some sort of a bigger shower than we just got yesterday. Now, I was chatting with somebody on Twitter. They thought that, that resistance line that I drew here earlier in the day, if I go back and draw it right here, he said, I think we go higher. And I said, yeah, we very well could. This market just keeps marching higher. But the problem is this resistance line was pretty formidable today, intraday on the 15-minute. But to me, it's a bit more significant today on the heels yesterday, but we didn't. We had another kind of a bottoming tail, but that bottoming tail really didn't really clear out the decks as much as we could. I mean, we could easily see maybe a nice drop down here to the 50-day moving average, and that would maybe suffice as a nice cup and handle pullback. I just don't think these shallow pullbacks that we're getting are going to be enough. Now, if we keep going sideways another 5 days, the chances are that maybe we do have a push higher through those levels. That would be the most bullish of all scenarios. But I think a lot of people are looking for a pullback, and that's the other caveat. The market never really seems to give the participants, the majority of the participants, what they really want. It seems to disappoint. Let's look around the horn just a little bit. The Qs, I think, are the strongest. The story today was the FANG stocks, Facebook, Apple, Amazon, Netflix, Google. They've been holding the NASDAQ up. The NASDAQ's pretty buoyant, a little bit more than the S&P. But then we go over and look at the small caps, and that's not good. That's a pretty good failure.
Mm-hmm.
We talked a lot about this 200-day moving average needing to hold, pushing up, and then becoming a base from which you could move higher. But we're not getting that now. And the IWM is starting to throw its hands up and give up a little bit. That's very notable in terms of possible leadership to the downside. If that doesn't resolve itself, the other markets might take notice. And then lastly, the Dow, which was looking okay prior to this, but the last couple of days, finishing a complete doji. Mm-hmm. So relative to the S&P 500, the Dow is even kind of looking a little sucky. So the only thing that's really looking okay at the moment is this NASDAQ that's continuing to stay up there. But we did see some financial degrading in the financials this morning. Here's a big sell-off on the open and tried to come back. But I think the real takeaway here, guys, is we've run right smack into major resistance across the board in a lot of things. And we really do need a shower. This market needs a shower. Monkey bath ain't gonna cut it.
No.
You want to add anything there, Mr. Andy?
Yeah. Put it. Well, first of all, zoom out on the spiders, and you can see that level of resistance there has been there for we've attacked it like 5 times now, and we just having a hard time. People will get discouraged after a while if you're long, and that's why there could be a pretty significant downdraft in the market. And also want to look at one other thing. Put it on the weekly on the IWM if you don't mind. Because technical traders, and we should have a bar reversal now, in the weekly there after 1, 2, 3, 4, 5, 6, 7, 8, 9, like 9 consecutive weeks without a bar reversal. Well, we have one in the making right now, and I would not be surprised if the spiders don't start looking like that pretty soon. You violated that last week's low, so I think that's something that a lot of technicians are looking at. I'm with Steve. It needs a good cleansing, and I think we may get it, but it's stubborn. I thought today we may get a little more follow through, but hasn't happened yet. So
If I was a bull, I would welcome these kinds of pullbacks that I'm drawing here. That's
Sure.
it's still really shallow. If I go back to the S&P, the S&P could also use that kind of a pullback. So until we get something to kind of give us a watershed moment, I'm very suspect of the amount of energy and the gas in the tank that we have up here. And again, we'll broach this same topic when we get to the trade of the week. It's why we picked the SDSs, but we'll save the rest of that content for that segment. So if that's all we got for the market takeaway, it's tired, and it's technically showing reasons why it should be tired here. So we can't really trust it too much. The only thing that could keep it going higher is, good economic news and the fear of missing out. I told Andy today with this, this action just back and forth. I mean, look at this: 4 attempts, 1, 2, 3, 4, and then 5 at the close, all kind of trading up to the same level. It's probably going to take some sort of, I hate to say it, but it's going to take some sort of bad news to maybe trigger the shower that this market needs. Because lack of bad news in this vacuum, the 401ks just keep coming. The employee, the employed are putting away money, and money is being put to work. And like Dan always says, it's not a great word, but the market is rigged to go higher. 401k and money gets put to work to go higher. And every now and then, the market has to be slapped and reminded that it can go both ways, and price action is not a one-way street. So let's go back to daily, and you're welcome to take the screen if you want.
Okay, sure. Let me do that. All right. Do you got it?
Yes.
All right. All right, guys. I'm going to talk a little bit about Holly today. Won't spend a whole lot of time in it. First, we can just go back to the spiders and just mention again what Steve was referring to. Let's look at the day that Holly had to work with. Now, for all of you guys who are in here kicking the tires for the first time, Holly is our artificial intelligence. We give her about 35, 40, maybe 45 now base strategies that she has to, she takes these strategies, and right when the market closes, she starts running them through all these different types of scenarios, back testing them over and over and over. And then each morning she will come out with a group of strategies that make the cut. And what do I mean by make the cut? They have to have a certain amount of winning percentage, you can see here, and profit factor. Okay, so basically today we're looking at Holly 2.0 now. Holly 2.0 was the best performer, and I'm going to take you real quick through the other ones. Let's just go ahead and start with the big loser today, which was Holly Neo. Holly Neo came to work today with 4 long strategies and 2 shorts. And you can see here, equal number, pretty much, exactly an equal number of longs and shorts she fired off today. But let's look what happened. The ones right out of the gate, I say right out of the gate, 30 minutes after the open. I'm on Central Time, so these all fired pretty much right 30 minutes after the open. Boy, tough time. You had 4 stop hits in a row. Now, some of these came back, but, still barely got stopped out right there. It was a nice concept, but the volatility of this one right here got it out. But I wanted to bring up this one first just to show you guys, there's we don't always show the best ones. Holly Neo didn't perform all day. It was down $1.02. Now what you're looking at on my screen when you see risk off or risk on at $90, that's if you were in the risk on column. But if you look at risk off, you're going to see it was down 909. And what I have mine set at, so I'm going to show you what we do here. You can go into tools, options, and I can do AI trade size, and I can allocate how much money I want to lose on the maximum I want to lose if it goes and hits its stop loss. That's why you see a lot of $200 losses here in risk off. Real neat feature we added several months ago. A lot of people are digging this, and also a lot of people are using it in our Brokers Plus product. Now, real quickly on Holly Grail. All long strategies made the cut today. Some pretty decent winning percentage, some nice profit factor. Holly Grail had 3 trades. Once again, the one that fired this morning at 903, another stop hit. Came back, made it. This was a nice one right here. This serve on a pullback on support was the strategy. It means the stock's coming in, it's finding support, and look at that, boy. No pain, bouncing, nice little risk. Look at that. Follow the 10 period there, Steve.
Perfect.
Yep, perfect. Following this 10 period moving average. So a risk on in this one would have got you with the $200 stop based on a stop loss that I have, but would have made 532. So this one finished up 75 cents because of that stop hit early. Now let's go to the Holly 2.0, which had a pretty darn good day, in my opinion. And the reason what I really like, and people who hear me talk about Holly, I love it when the risk off performs well and the risk on. Now, the risk on is due to one stock, and we'll talk about that one in a minute. But here's risk on, 725. Look at risk off, 680, based upon my stop loss value of $200. So pretty decent day when you take into account, guys, this is what I'm talking about. This was just an awful trading day for any strategy, unless, you know, if you're discretionary and you're finding a good momentum stock and you ride it all day, hey, it could be a great day. But when you're an AI system or any type of system where you're trying to, you know, peg this market, it's just very difficult. No momentum in either direction. You can see here a couple of really good trades where risk off got out for close to $200, but look at this. They sold off at the end of the day and finished down $200. Now, let's take a look at the nice one here. Beautiful, beautiful trade. It's a CVNA. And here's the daily chart. You can see there, kind of breaking out of a multi-month high, look like about a 3-month high there. We got the signal right here, guys, and Steve and I were talking about this today, this beautiful pattern where it ran up in the first 15 minutes, then got a little squirrely, and then just kind of started going sideways right here, and then it broke that range. Looks like it broke about a 45-minute range there, and that's where the signal was called at 44.75.
Most importantly is how it's lining up, in my view, to that. You know, if I saw that arrow and I was day trading this stuff every day, I would be on that setup right there every single time. But I'm not a momentum day trader, I'm a swing trader. But I did a segment once that said if I had to go back and was told you have to go back and trade day trading, how would you do it? And I said I would try and keep it as simple as possible, using a couple scans for those types of morning explosions, and then about an hour and a half into the day is when the sweet spot comes. Look for the sideways pullbacks to that moving average, and leaning on that moving average as your entry. There's a perfect example right there.
Yeah. And then, guys, this is what I wanted to point out, because a lot of people get confused with, you know, risk off and risk on. They think we developed this so you can come in here and just hook up when this is available for Brokerage Plus and auto trading, that you can just hook up all these strategies and run risk on all day, and you're going to have just incredible numbers. Guys, that's not what it's worked. That's not the reason we created this. We created this so maybe later in the day, let's say you took this trade and you got out with Holly right here for, this target. It was a target hit. The target hit. But look, everything, once that target was hit, it was breaking through this major resistance right here. Let me mark this up. So this is why everything's lining up, breaking out here on the daily as well. And, you know, this is why we try to help you with risk on, to let you know if you did get out of this, you could look here later in the day, go, gosh, dang, that went another, 4 times higher than what I got out as far as profit goes, almost. So this is why we give you risk on. All right, maybe you can look here, you can look down and say, wow, I got out this one. This chart maybe didn't look as pretty as the other one. I got out, for whatever reason, these didn't work. But we want to give you an idea, guys, of if you were to hold it, it's not to where you can just hook up the machine and let everything run risk off or let everything run risk on. Okay, I think the best use of this is going to be those who allow Holly to get the entries, machine gets the entries, man takes over and manage that trade. Man versus machine. That's what I find myself doing in the in Brokerage Plus, even though I'm not doing Holly strategies right now. But I just wanted to point that out. That was the trade of the day. A great one right there.
Phil has a good question related to brokerage,
Okay.
auto trading there.
Which one? The one from Brett?
Bill.
Oh, Bill. Can you override or gray box trade with Brokerage Plus? So, yes, Bill. That's exactly what I was referring to. The gray box model is going to be best, I think, with Brokerage Plus. Auto trading is difficult, especially when you get in a market like this. This is where maybe if you have long strategies and this breakout right here above this high would have kept going. Maybe an auto trading strategy would have worked good, and you in risk on mode. But when you're, let's face it, a good portion of the time you get action like this. Okay, this is why I want to be in control. I want to be able to take my profits when I want to, take my stops earlier maybe than Hollywood. Because I can see more than Holly can. Holly's equipped with a lot of filters, but she's not going to beat your eyes as far as seeing what the market's doing, what sectors are doing, et cetera, et cetera, et cetera. But to simply answer your question, yes, you can do that. You're going to be able to create your own stops. You're going to be able to disengage and create and control it yourself as far as your profits go and your losses go. So that's where I think it's going to be so much more beneficial.
Waleed is bringing up a great point that we sometimes talk about here. Sometimes you can set the price alerts for Holly trades when she gets stopped out and use that as a contrarian entry. There is nothing wrong with that mentality. Dan talks about it a lot. We actually even are trying to get Dave Mabe, our developer, to create some sort of a strategy that can signal when Holly gets stopped out of a trade, like, hey, second mouse gets the cheese. Holly just didn't cut it. You want to take it here? Sometimes those can be the best trades. Trying to catch up here. A couple questions came in. Dave wants to explain risk on and risk off. Quite simply, Dave, risk off is the value when Holly exits the trade for one of the 5 reasons: stop hit, target hit, profit save, whatnot. That P&L is locked in and frozen in time. So risk off values will always be frozen in time. Risk on values are the same trade, same entry, but the value stays open. The P&L continues to fluctuate all the way into the close. And sometimes what that can do, if we see all 3 Holly segments combined in risk on mode, meaning the AI has identified good entries, but the AI is getting out too soon and everything else is scoring better P&L in risk on mode, that's a tremendous piece of information for you to help you make your discretionary decisions in or outside of what Holly's doing. Let trades run longer. We always hear that, right? Cut your losers quick and let your trades run longer. Well, letting your trades run longer is the hardest freaking part of this business. And what I'm saying here is we now have a new tool to kind of help you sit on your hands and not hit the sell button, maybe take profits on half and let the other half run, because the AI is in full-on risk mode, demonstrating the canary in the coal mine is working in a longer hold fashion.
Yeah, Gerald has a good question. Which is the most conservative versus the most volatile, Neo, Grail, or 2.0? I would say from top to bottom there, you see on my channel bar, Grail would probably be the most conservative, and then working yourself down to Holly Neo, which is the more aggressive style, a little more liberal stops, and maybe some more volatility in the filters. Holly, yeah, Neo's kind of been struggling, but I've seen this thing just go crazy sometimes. Finish up, 15 points. But lately when you get in these little choppy markets, it's hard for all of them. That's why when I see, this is just incredible, guys. If you have an automated system that is producing these kind of results in a day that you had in the spiders, I'm telling you, that's hard to do. You go out there and you try to pick 6 stocks where you're basically gonna, in risk off, win on every one of them. Looks like you flat a couple. But I guess that's about it, Steve, unless we have some more questions coming in.
Well, you can send it back over, but I'll finish a couple questions. Ted wants to know how does Holly learn? How does Holly learn? Well, Holly learns by going through a machine learning process called Monte Carlo. It's a decision tree. And about 70% of the data is continually reworked through back testing, rejiggering, refiltering, trying to increase the score of back testing with a specific strategy. Maybe it's a pullback strategy, stocks that explode in the morning, pull back 25% and have nice volume. Sometimes that's the quarterback strategy, roughly. So Holly might take that strategy and just keep working it and seeing what is working best. Is distance from S&P a big factor? Is VWAP a big factor? And the machine learning comes up with what's important and what's not important. And then lastly, what I'll tell you is very important for those who study statistics and this kind of stuff, is the final scoring and the final placement of the following day is not determined on the scoring that happens with the constant reruns and reback tests. Once Holly assumes in the machine learning process that this is the configure filter set that is going to be the best score, we're not done. The AI then drops that last back test into what's called an out of sample data, or as I call it, virgin data. Holly hasn't seen that data yet. So it's a secondary confirmation that if the AI scores just as well in the out of sample data as it did in the in sample data while it was working through the machine learning decision tree process, then we know that score is good and hasn't been curve fitted like a painter who refuses to put his paintbrush down. So that's the gist of it. If you want to learn more on that, you go to the bottom of our web page, and at the footer under the frequently asked questions, there's a link that's called AI strategy descriptions, and you can go in there and read. This strategy looks for stocks under $10, primarily in the morning, looking for momentum, relative volume, et cetera, and you can kind of take it from there. All right, Stephen, don't worry, we're going to talk about SDS in a second here, so I'm pretty sure we'll answer those questions.
Let me go. I know you have some other content, Steve, but I think it's good we answer a lot of these questions, if you don't mind. Do you want to get rolling, or is it okay if we answer? Oh.
No, go for it.
Okay. No, Bill. Yeah, Bill asked, can you tell us what Holly saw in HIIQ? Well, let's take a look at it. Okay, this is 9 o'clock, and remember, it's not so much what Holly is seeing. Okay, it's what Holly's statistical data presented to us. Okay, this is from a strategy called putting on the brakes. HIIQ. Let's take a look over here at the strategy, putting on the brakes. Okay. Well, we do have a definition page. I can direct you to that if that gives you a brief definition on each one of these strategies. But putting on the brakes is basically a fading strategy. Winning percentage, back tested last night, it's almost 64%. So almost a 64% winning percentage and profit factor of 2.33. Now, it's obviously in a downtrend, selling off in some decent volume. Honestly, this is where Holly can be better than what a human sees. If I'm seeing this and I see a bar reversal after all these set-offs, I may have went long on something like this. But Holly may prevent me from doing it because I'm going, whoa, look at the statistical models telling me this is not going to follow through. Now, had the market continue, I mean, let's face it, look at everything through the backdrop of the market. The market wasn't doing anything today. Okay, it was slopping sideways. As a matter of fact, this HIIQ looks very similar to the market. If you look at the close, it's pretty much right at where the trade was alerted today. Now, look right here, went to low, or close to lows. And had the market continued to fall down, this may have been a very, very good trade. Okay, it's statistical probability. The fact is, it didn't work. She got stopped out pretty quick. Actually, this is probably a pretty tight stop, I would think, on a stock this volatile over the last few days. Earnings date. That's why I just released about a couple of days ago. That's why it's still kind of volatile. But nonetheless, I wanted to give you, this is what Holly saw in the trade. It's nothing but this strategy back tested very well last night. Okay, that was the only alert from that strategy. In other words, that's the only one that lined up with all the parameters in the alert meeting at the same time. But it didn't work out. And when you have a market like you had today, you're going to have a lot of stuff. This is why I say always look at the backdrop of the market. If you get the feeling it's going to be a very slow, crappy day, look at the way Holly started out. Back away. More than likely, your strategies aren't working either. All right, Steve, you got it.
All right, I think we're caught up, so we'll go ahead and take it over, and we'll move into the trade of the week, which we kind of have already talked about. Again, looking at the giant level of resistance, the wall of resistance there. Knowing what Andy and I know from market experience, it's really hard to come in here and start saying, yeah, let's start calling some great long setups at this massive brick wall. It's just not that easy. A lot of charts look like that, and a lot of charts I think are going to need some sort of a shower to really back up. So something that Andy and I used to do all the time in our managed account that was called Ditto Trade, and still do in our repertoire of trading and managing positions, is, you know, maybe you have a couple of decent things going, like, you know, we'll get to this in a minute, but iRobot, you know, maybe somebody's in iRobot and it still looks pretty decent. Well, actually not after today's candle, but you know, you've got a couple longs, and here we are again running right into our brick wall. Well, what we used to do a lot, and still do, is consider an ETF like SDS like a hedge. You've all heard the term hedge funds. Well, hedge funds are not mutual funds. Mutual funds have the mandate to buy, and buy. Hedge funds have the authority and liberty to hedge anything. So when they see troubled waters coming, or, you know, they've got a lot of longs and they don't want to just go sell all their longs, they can buy insurance, either by putting the S&P like the VIX will start to show, or you can just flat out add a position like the SDSs. So as I look at the market here, I'm not going to make any predictions, but we're creeping lower. You know, when price action squeezes out on the branch like this, sometimes they don't ring a bell when it's time to sell. Sometimes you get kind of a nasty gap down, and from the bell, it's just selling on the open, and you just standing there like a deer in the headlights. You know, I'll use JC's term. That's on the table. I'm not saying it's going to happen, and I'm not predicting it's going to happen, but wouldn't it be nice to know that you've got a couple longs and you're still holding those longs overnight into tonight? And what if tomorrow we do gap down significantly and start selling really hard? Well, right off the bat, you've got a profitable position in SDS to try and lighten the blow and make decisions on how you want to manage your other ones individually. Maybe you got a couple longs that are holding up and a couple that aren't. You sell the ones that aren't. But it just came to a point where there was really nothing. The cupboard was bare when we went to look for the trade of the week this week, and most of our go-to scans, most of the stocks we looked at had this kind of a look. They're just extended, running right up into that brick wall, butting their head against it. We really feel like we need a pullback. And again, we kind of create a handle and a cup and handle. So we weren't going to just go in and say, this long might work if the market goes. No, we're going to say this is another way to approach risk management and portfolio management. So that being said, Stephen had a good question. He said, you know, well, is the trade live or was it waiting for a close above? Typically, when we do the trade of the week emails, very rarely we'll say buy at the open regardless. But you know, every now and then that can happen. Sometimes more than likely, we'll say, you know, wait for a print to trade, and that print that'll trade will be above Friday high or Thursday high of the prior week. And so in this case, that's kind of what happened. And so the trade is live, Stephen, but remember, we're not scalping here. Let me go to SDS so you can see the green line. There's the green line. It did trigger yesterday. And this brings up a good point. I made a note here as well. Just because I write down that, hey, and the reason that trigger was where it was because if we look back here, I'm using the high of this back here. That's basically what we were looking at when we wrote the trade of the week. So the high back here, if it takes that tip of that green candle out, there could be some follow through. Likewise, the downside, the swing exit is right there on the charts showing you. So this is our slop range, 34.67. That's roughly a point. So roughly a point, and maybe we can stick around and make 2 points if the market does fall. It'll happen quickly, and if it does, then yay for the people who are holding SDSs. I would recommend, if we do get our move, this is the kind of move that might last maybe a day and a half. So if we get a big move, if we're lucky enough to get this in this trade, this is not to hold on till the sunset. You know, this is a quick vehicle to get in and participate on what the market really needs. Now, what I wanted to say a moment ago is having the email, you know, in your email, it is right here. You know, we talk about waiting for the trigger. Well, if you happen to notice what I noticed yesterday, with the market gapped up, and then as I said, we lost the buyers right there. There would have been nothing preventing, oh, excuse me, I was wrong, back up. We lost the buyers right here. So knowing that, if you go back and look at the SPY, what I'm getting at here is maybe some of you got a bit of a head start. You know, once we lost the buyers in the S&P, there was a lot of meat on that bone. And you know, we didn't know how the market was going to open up this day. But what I'm getting at here is if you felt like, ooh, this is interesting. There's nothing to prevent you from getting in and taking an early look, maybe a half size, not a full size, maybe a half size, and then when it triggers, you could take the other half, and that's another way to consider playing these things. You don't always have to wait for the trigger. Ideally, there's a reason, but it was really interesting yesterday how the selling really took off quickly, and it was almost like, dang, we're going to hit thing. Feel like you have to wait for the trigger sometimes. The discretion, of course, is up to you. So let's see. All right, looked at it, waited to pull the trigger. So what I want to say is, this is swing trading, guys. What's our risk? 1 point. We're risking 1 point to try and get up here and maybe make 2 points. And if it happens, it'll probably happen quickly in a day and a half or 2 days. But right now, there's no point in getting upset about every little one of these little jigs back and forth. We're in. This is our entry, and our exit's down here. So you just got to let it slop around. We didn't get what we were looking for. Well, if you're looking for a pullback in the market, we didn't get it today, but I sure feel like it's possibly setting up for something tomorrow. Market had every opportunity to use this big washout monkey bath yesterday, but it can't get back above. And I find that kind of curious on the heels of yesterday. So we'll see what tomorrow brings, but there's your risk reward. Risking 1 point in the SDSs to make 2. And if we do get a big break in the market, we could come down here in the S&P and maybe back down to that 200 or even lower. And that could give you a really nice day and a half or 2 days move. But until then, our decision is made, our risk is set, our reward is on the map. We're hoping to get it, but we just got to sit back and wait and see. Swing trading is not about getting in a position and having it go for you immediately. It's about getting in and managing it, and then watching the tea leaves and waiting for things to materialize. If the market were to blast off on huge news, well then maybe you get out before the stop. The backdrop of the market has changed, but until then, the backdrop is not too healthy. Again, this is really significant to me that it couldn't get back above these levels on the heels of that big sell-off yesterday. The buyers are conditioned to come in here and buy. But boy, is there some supply waiting for them at that 179, whatever, 279.70 level. So that was the reason for the SDSs, guys. Typically, we don't like to call short sells, but this is a way to participate if the market does break. And again, I wanted to introduce you to the fact that you could have 2 or 3 really nice long positions you've been nursing and they've been working for you. This is essentially just buying a little bit of insurance or protection in case the market does decide to gap down and just rip low and puke lower without you even knowing what happened. We've seen it before, and I'm not predicting it, but these are the kind of setups where those kind of days can materialize. There's been a lot of climbing out on this branch, and the more we climb out on this branch, the more susceptible it is for some sort of a break. And that's the play this week. The trade is live, and you know your risk and you know your downside, so it's up to you how you want to manage it. If you want to add anything, Andy, that's cool.
No, it's I love fading. The thing about fading, I mean, obviously you're not like jumping in front of huge momentum here. There's signs that this thing is getting tired. But two points to remember, when I'm fading, what I do. First of all, my initial size is never the full size. Because I know there's a chance, if I'm right, to make a really do well, because I'm getting in early. Okay, I'm not chasing after it's already broken. So I'll never take a full size at first, and then I always keep a tight stop if I'm wrong. And you have to adhere to your stop. It's so easy, especially when you're fading, to try to talk yourself in, once your stop is hit. No, I know as soon as I get out, it's going to reverse. I just know it is. I'm sticking with it. I mean, those are your demons talking, and you just have to, you have to adhere to your stop and stick with it.
I highlighted the portion of the content of the email just to kind of bolster what Andy said. Sometimes you got to lean against the herd to make money in this business. Mm-hmm. And if you can prepare for such an event and having a game plan, then it's nice to be able to have that. So that's where we are with this week in the thought of the SDS trade of the week. All right, so running out of time. Let's run through what we got remainder. I'm going to start with just the sectors. We did this last week, and I have some thoughts. I know I left you guys last week on the GDX. I have a quick thought on this. Bobo, I have a quick thought. We talked about this candle last week, and I said, hey, this looks pretty good. It's a nice reversal candle right off that 20 period, kind of in line. But does this kind of stuff always work? Is there a 100% guarantee in these things? No. So what I'm saying is, I want to let you know on this next day, it was like, whoa, this is not working. So, you know, on these days when you look at this reversal candle, we talked about a nice 3-day pullback, nice bounce. The very next day, when I have these types of setups, guys, we must, capital M, we must see a build off of that candle. Once the price action dips back into that tail, into that wick, forget it. It's not going to work. And so this is an example of the second mouse possibly getting the cheese. We have kind of a second setup down here, which seems to be more in line with, you know, where the general market is. The gold miners have been kind of a defensive play lately. So if we do get some more weakness tomorrow, I wouldn't be surprised to see this ETF move higher. And that's going to be one of our setups. Again, I'm going to set that up. So I'll actually do that right now while we're speaking. Kind of kill two birds. So I'm going to say the high of this is so we're going to go 21.97. Create price alert. GDX second mouse gets the cheese. And I'm going to set that, and I need to clear quick. Oh, looks like it triggered higher because it's already been. I'm going to grab this and move this up just a little bit, and then it resets back to a blue line. I'm going to get rid of. Let's see. We'll come back to that. All right. Quick look at sectors. What's interesting? Big move in China stocks there. That's kind of curious. Natural gas is actually looking decent, but stay away from that monstrosity. China, again, another China ETF looking pretty strong. Now, silver and gold, you know, if you like to play the commodities, the problem is the overnight markets and the weekend markets can really gap up or down against you. But these look like an interesting reset in the silver and gold ETF, perhaps. We'll see. There's GDX. We marked that up. That's the best looking one so far. You know, these banks are just sliding sideways. They can't get back above their 200-day. That's pretty gross right there. There's gold's going to look decent as a possible pullback purchase. Now TLT, treasuries, not doing a whole lot either. That's not looking good. Qs, we looked at that. IYR, just a long sideways channel. Gold miner juniors are going to look the same. Dow, we talked about that. Healthcare is kind of a mess. Not really seeing a whole lot here, guys. Steel could have bounced a day or two ago, but hasn't. It's looking sluggish. More banks. Technology. Looked at the spiders ad nauseum. The agriculture. Now there's one more in here that I do like. Let's see if we can find it. It wasn't that. Energy doesn't look bad. It's not that one either. It's SMHs. I'm seeing kind of a little wedge being built here in the SMHs, and coming on the heels of what we talked about this morning or earlier. I mean, the NASDAQ is trying to lead the way. So, you know, there's a pretty definable flag. Let's go ahead and mark this one up too. We'll put it right at the highs above today in case it wants to. No, I'm going to put it above the highs of yesterday. I really have to have a definitive move. Okay, so this is the semis. Go ahead and save that. So all I'm really seeing, guys, are the semis and gold miners. Oil doesn't look bad. Again, there's a commodity. There's a decent wedge for you there as well, but oil can be extremely nasty. You've got you know, builds and oil reports that come out on Wednesday mornings at 10:30, I believe. They can really smack the price around, so be careful with those. And it looks like really the only thing I could come up with that looks decent, and we marked them up, is semiconductors, and there's the semis, and then the gold miners. And again, I did want to touch on that because we talked about gold miners last week. When that bottoming tail gets taken out the following day, get out. Don't even ask questions. It's not working. These bottoming tails, after 3 days of pullback on the trend line, they should bounce. If they don't get stubborn.
And really, Steve, that's a trade you probably shouldn't take until it takes out the high of that bottoming tail. But that's my.
Oh, sure. What Andy's saying here is, you know, I was saying let's look at it right there, but Andy's saying maybe you might want to look at it above there. So what I'm going to do is I'm going to clear out last week's. Again, we, the best one of last week was iRobot, found on the comp list, the composite list. I've got a couple scans from there. This one also triggered, but it's going nowhere. These individual names are triggering and going nowhere. There's our SDSs. We'll keep that. This one also top tickled and then retreated. Not fun. This is the kind of stuff we see up here at these levels in the backdrop of the market. So with that said, I'm going to go ahead and delete the ones we're not going to use. And I'm going to keep SMHs and GDX because those are going to be the first two we're going to work with. All right, so we're going to set those. I'll share those towards the end. I've got a few more names for you. The first one is on that composite rating list. And this looks for stuff. We found iRobot on there last week. It's still leading the charge. So the ones that I liked this week, let's see. Nope. Definitely nope. Interesting, but no. I know I've got one in here. Which one did I have? Oh, did something drop? You know what? Something might have dropped off. So this is one of this was one of them. I've got three: Neo and Chegg. The one that's not on here, I'll type in because it was on earlier and I still liked it. It must have closed a little bit weaker. But Neo, and I want to remind people, Neo Genomics. This might be something you want to day trade. Anything genomics, pharmaceutical, stuff like that. A bit more risky to take home overnight, so maybe these can be triggered for day ideas if they do trigger. But I'm going to go ahead in here. I'm going to put this one. Oops, I got to get my. All right, the high on Monday, 1966. So we'll go 1967. All right, there's one trade. Chegg seems to show up often on this. Very, very similar to what the market's doing, but I'm just going to go ahead and throw it back to, you know what? I don't like this one as much. Second thought, I don't like it as much.
That was a big move down yesterday. Oh.
Yeah, I don't. Yeah, it was a big move down yesterday. So the one that's not on here that I saw is everybody's new favorite, Roku.
Yeah, you passed it earlier.
Why can't I type?
I like that one too. Yeah, it's the fourth one from the top.
Okay, so I did like that one. All right, so what I'm thinking here is it's a little underbaked. It's a little ripe still, meaning it would be nice to maybe see another candle come back and touch that moving average for confirmation, but then the trigger will definitely have to be the new highs. So what we got here is Roku defying all odds. A big short float, 31%. It can't pull back. I think if you happen to see this thing touch the 10-period moving average at any point, it should be on your radar because that might be a lot of times, Andy and I have noticed price action won't do what we want it to until it first completes step one, which is come back and tag that moving average. Maybe it's a function of the algorithms out there. They need to see that kind of stuff, but that's what we got. So the high here is 66. We'll go, I'm sorry, 69.89. So we'll go 69.90. Short squeeze is kind of the play there. All right, and then I won't bring up the scans because we're running out of time. We got GDX and we got SMH, so we got four so far. I got rid of Chegg. Zip that one. And then there was a few from Holly today that I found kind of interesting. QTS, nice little pullback, trying to have a little rounded base here at its 200-day. I'm going to go ahead and put an alert above yesterday's high, 42.41. And what else did we have? We had PDC. No, that's not the one I was looking at. What did I write down? Wow.
Was it from today?
Oh, PDCE. Forgot to put the E on the end. So I kind of like this, the way it's building higher highs and higher lows. definitely worth noting if it gets above this candle here. So we'll go 39.71. Perfect. And then lastly, from Holly, we had HIIQ. Now, what was interesting was that, yes, this was a short play during the day, but in the bigger picture, this looks like a decent pullback, very kind of similar to the GDX, also holding that 50-day moving average, which is turning up. I think that this the down selling could be gone on this one, and we'll look at today's high and trigger that one, 37.80. All right. So there are a few ideas. What I will do is I will, before we go back to Scott, is grab my, where'd you go, price alerts, and then we scrape them, and I will create a cloud code and drop this cloud code in the chat window. Share, 7 selected, copy all, and then price alerts, control paste. Those are just add those same alerts to your price alert if you receive the cloud link correctly. All right, well, we'll take a look at one chart for Hal at XLI, and then we'll bring Scott in to bring some announcements. XLI rolling over a little bit. Hal, I would like to see it hold this 20-day moving average for sure. Look how it kind of also is a pivot level. I don't know if you're currently long, but you said it was a Holly trade, I think. Yes. So it's kind of rolling over. It's in no man's land at the moment. I could see a place for buyers to step in if the market conditions were correct right there at that orange line, but I would not want to see it trade below that rising 20-day moving average. All right, well, I'm all talked out. So let's bring Scott back in and put the slide presentation back up, and he can walk us out.
Yeah, thank you. That sounds good. So we have a podcast that we put out weekly. You can subscribe to it by searching for Trade Ideas Podcast in your favorite app that you listen to podcasts in. Add it as a subscription and check out the past episodes while you wait for the new ones. Probably some good stuff in there, especially the guest ones. There's an ebook that both Steve and Andy contributed to writing chapters for. It's 5 ways to win in a post-BTFD market. It's free. Just go to trade-ideas.com/ebook, put in your email address to get the download link delivered instantly. We have a discount code that's good this month, March of Ideas. It is case sensitive, so use all caps when entering it. It saves 15% off your first month or year of Trade Ideas. Standard subscribers can also use this to do an upgrade. Just go to the home page, log in the upper right, and select the Change My Subscription option and use the code. Email support, info@trade-ideas.com if you have any questions. That email address, the info@ goes directly into our help desk software so we can have the appropriate team member help you out. Steve Gomez is at Today Trader on Twitter, and we also have @Trade Ideas. Facebook.com/Trade Ideas Pro is our Facebook page, so you can like it and share stuff we post with your friends. We'll have a recording of this webinar up later on tonight or tomorrow, so stay tuned for that email. And thanks, everyone. Thank you, Steve. Thank you, Andy.
All right, see you next time.
Later.
Thanks, everybody. I'll see you Thursday.